Hi, my name is Jim and I was retired. I've been planning year-end Roth conversions and the corresponding fourth quarter estimated tax payments. Last week's redemptions of I-bonds generated ordinary income, and that influences how much of my tax-deferred savings I can convert to my tax-free Roth accounts and still stay within my planned strategic income levels. In this week's video, I'll show you how to plan a Roth conversion. Follow along. Now, I've done a number of videos on Roth conversions, and that is moving funds from your tax-deferred tax bucket to your tax-free tax bucket. And you do that by paying the taxes in that current year. Many retirees decide to do this while they're in the lower tax brackets before Social Security and required minimum distributions kick in and push us into higher tax brackets. Yet you can't do big moves. I've covered that before. You just generate a big taxable hit. And you need to do it to stay within your current tax brackets. Now, I'm going to put some links below to the past videos I've done on this subject, but this week I want to review a few online tools that I found, including one at NewRetirement with their Roth Conversion Explorer. And let's see how that works. Now, if you recall, NewRetirement has a basic free level as well as a Planner Plus level that includes a Roth Conversion Explorer. And that is a pretty detailed little tool that allows you to optimize your Roth optimization strategy over multiple years. And you can do it to hit the highest estate value, to stay within a current tax bracket, or to solve for the lowest lifetime tax liability, or to stay within levels that avoid income-related monthly adjustment amounts on your Medicare Part B and Part D premiums. Yet the Explorer does not include the current year in its optimized plan, and instead, NewRetirement has a standalone 2023 Roth Conversion Calculator, which I'll show you in a moment. And I should point out that this is available at the basic or the plus level with NewRetirement. So first, let me go through a model couple that I'll use in this experiment. The model couple is age 65 for the male and 62 for the female spouse, and the male has been the primary wage earner. Between the two of them, they have an adjusted gross income of $95,200, and they filed married filing jointly. Now, the income includes a pension of about $25,060 that the primary earner has just started. And then the withdrawals so far this year, there's been a $34,000 withdrawal from the IRA and a $22,000 withdrawal from a 401k. Now, they've also gotten interest income of about $96.40, and that includes some significant income from those I-bonds they just redeemed, as well as ordinary interest income from banks and brokerage firms. And they've got about $3,000 in dividends, of which $2,200 are qualified dividends, and a capital gains of about $1,000. And those figures are going to be important in a moment. In the details of the 2023 Roth Conversion Calculator, NewRetirement draws attention to the tax brackets built into the model. The 12% tax bracket applies to taxable income from $22,000 to $89,450, but the long-term capital gains tax rate of 15% begins with taxable income starting at $89,250. So there's a difference there. And if you have a lot of dividend and capital gains, you may want to stay within the 0% tax bracket. And again, this model, there's only about $1,000 in capital gains, and so it may not matter, but it may if that's your case. So here is my basic level of New Retirement. This is the basic level, not my personal Planner Plus model. Remember, the Planner Plus includes this Explorer for Roth conversions, but it's not available unless you upgrade to Planner Plus. But here's how you can get to the 2023 Roth conversion applet with your basic membership. Watch this. You go down to Help, go to the Help Center, and then search for this, the 2023 Roth Conversion Calculator. And it'll include a button that says Roth Conversion Calculator. Go to it here. This will show you a engine that you'll have to populate each time. So you'll have to adjust this. And I'm going to go ahead and adjust this to pull this up, married filing jointly. And we said that the AGI of 95,200 as in our example. And let's get started and see how this works. All right, so in this next page, then you get what happens if you have no additional conversions. Your estimated taxable income would be $67,500, and that is your AGI minus the standard deduction. The next column over is if you converted up to the top of the 12% tax bracket. Again, your estimated net taxable income would be $89,450. And that would be in that 12% tax bracket, but notice it's just over that level for when 15% capital gains would start to apply. And again, if you had big capital gains, you might not want to go over that. So you can also convert up to the IRMA level, the income-related monthly adjustment amounts, that if you did this or more, you'd start to be subject to IRMA 2 years from now for your Part B and Part D premiums. And that's per person based on that income 2 years ago. That's how that works. So let's go ahead and convert. And let's say we're going to convert to that 21,950. And you'll see, then you're subject to that. But if you just lowered it a little bit, and let's say we 21,750. Now, if you did 21,750 as your conversion amount, you'd go to the top level of your estimated taxable income would be 89,250, and your long-term capital gains would be 0. So again, that may matter to you, it may not matter to you, depending upon how much of your income in your AGI is capital gains. And if it's a significant amount, you might care about that. If it's not as much, you might want to go ahead and just go up to the top of the 12% tax bracket. But this is a clear, easy way of calculating how much you would want to convert in 2023. And it's one of the things that I would then test with some other engines to make sure it fits in your circumstances. Now, in my case, if I did that, the net income would be here, but the gross income would be above 100,000, and more of my retirement income would be subject to New Jersey tax than with the $100,000 retirement income exclusion if your gross is 100,000 or lower. So there's an incentive for me to cap beyond this. But this allows you to plug in some basic numbers. But I would also urge you to go over to the 1040 Excel spreadsheet and see how that works out for you. And let me show you that. Now, I've shown this spreadsheet before. It's a free download. However, Glenn Reeves, who created it, notes that if you want to send him, now I've shown this 1040 Excel spreadsheet in past videos on this same subject. And it is something that you could play around with. Now, in my version, I have to be very careful because numbers opens up that Excel and not all formulas work. But it works enough for me to get a model of what I can expect. And I did that here with this. If you notice the adjusted gross income in this is a little bit off, different. It has a little calculation for taxes. This is how I did it. There are no W-2s for the retired couple. The interest, I plugged in an estimate of what they got for the Treasury direct interest, as well as other interest from all other banks and brokerage firms. And in dividends, I plugged in ordinary incomes and qualified dividends. 1099-R, I plugged in the withdrawal from the IRA, the pension, 401k withdrawal, and then this conversion. And then you go to the 1040. It'll show you that your total income, your total adjusted gross is now, so in my case, that'd be a problem. And again, this allows you another way of modeling, but I would also suggest that you go through a couple other ideas. One of which is to look at your TurboTax from the last year and use the what if worksheet in there and calculate, pull in some numbers into your what if scenario in TurboTax and see if that works for you. Now, the other thing you'll need to do in the 1040 tax form shows you a little bit about this. Here I've assumed that the couple has done some estimated quarterly payments of $500 for the 3 previous quarterly estimated payments. And they still have one more that they'll need to make. You notice this is $2,444 that they will have to make because of the Roth conversion as well as those I-bond taxable income. So that's something else you'll have to consider. Now, you'll need to make that estimated tax payment by January 15 so that you don't get penalized for not paying your taxes in 2023 as it occurred. Because you're doing your Roth conversion in your fourth quarter, you have until January 15th to make this payment. Now, the other thing that I'll tell you is that you can mail it in with a little statement to an address according to your tax returns, or I hope you're using direct pay for your estimated tax payments. Hey, please like and subscribe to this channel if you like entertaining ideas from a DIY retiree. I'm not selling a course. I'm simply sharing my perspectives to help you prepare for your own DIY retirement. As always, I will conclude with my standard warning. I have no initials after my name, so take these as entertaining ideas from one educated consumer to another. Always do your own due diligence and seek out a professional if you need one. See ya.